Understanding the global economic context and the various problems encountered with the common currencies that led to the development of Bitcoin is an indispensable prerequisite for those interested in cryptocurrencies. Bitcoin is the very first virtual currency, created in 2009 by an unknown inventor. It is an electronic currency that relies on a decentralized computer network. It does not depend on a body such as a central bank, as is the case with the euro or the dollar and the rest of the currencies circulating the world. Bitcoin relies on a computer network where each user will play the role of both server and customer. This is called a peer-to-peer system. All transactions made between different Bitcoin users are then listed and recorded in a large computer registry called blockchain. The blockchain uses encrypted transaction blocks. Let's discuss the benefits of Bitcoin and cryptocurrencies in general. First of all, Bitcoin is a free, decentralized currency. It does not depend on any regulatory institution. Indeed, no central bank or state can control it. It is the users, especially the miners, who control the Bitcoin network. Thus, the value of this currency lies solely in the trust attributed to it by its users. It is therefore the law of the market that sets the price via supply and demand. Simply, if users do not trust the currency, then they will want to sell and the price of the BTC will fall. Conversely, if users trust it, then the price will rise in proportion to demand. Second, the blockchain technology used by digital currencies can completely do without a trusted third party. This property makes Bitcoin a credible alternative for all payments, both on the internet and in real life, between two individuals, provided they have an internet connection. We are talking about peer-to-peer transactions. This is very interesting for some developing countries that do not have developed banking infrastructure, as is particularly the case in Africa. In such situations, the use of cryptocurrencies could be beneficial to the local economy. This is all the more so since the opening of a portfolio of cryptocurrencies, called wallet in English, is extremely easy and fast. It can be done without the approval of a banking agency. The fact that there are no trusted third parties means that the money deposited on a portfolio of cryptocurrencies is held by its owner. Unlike the traditional banking system where the bank enjoys the funds deposited by customers. With cryptocurrencies, users are free to do what they want with the savings. They have total financial freedom. This is again a significant advantage. The absence of a third party, such as a bank, also makes it possible to completely free yourself from the costs of account keeping. Thus, owning a Bitcoin wallet is free. Another major advantage of crypto actives is that they allow quick money transfers, in the order of a few minutes, compared to conventional bank transfers that can take several days. These can be done with no maximum or minimum amount limit, from anywhere in the world, at any time of the day or night, at extremely low fees compared to those offered by conventional banks. Besides, you should know that every time a block is added to the blockchain by a miner, Bitcoins are created. However, Bitcoin's initial computer code sets the maximum number of BTCs in advance. There will be no more than 21 million. In this way, it is considered that there is no money printing, as is the case in the current economic system. This is the best way to guard against inflation and the loss of purchasing power. Regarding the security of the Bitcoin protocol, it is ensured by the latest scientific and technological knowledge in cryptography. Because of how it works, it is impossible to hack into a wallet. Thus, only the owner of the private key can use the funds. This is an undeniable advantage of digital currencies, since no one will be able to take money from an account without the owner initiating the transaction, be it a hacker, the government in case of taxes, the bank for unexpected fees, etc. Another level of security is allowed by the blockchain. This technological revolution allows us to certify that a transaction has taken place. Once validated, transactions are registered forever and cannot be deleted. This is a guarantee of security for users, since a money transfer cannot be cancelled. The strength of the blockchain lies in the unfalsifiable traceability of all the transactions it allows. Indeed, it is possible to go back to the very first Bitcoin transactions to analyze the origin of the money. This can be useful in combating tax evasion or money laundering. However, it is necessary to balance the fact that the creation of a wallet is anonymous. This is the subtlety of cryptocurrencies. The owners are anonymous, but all the transactions are public. So, let's recap. First, Bitcoin advantage: the safety and reliability of the currency. The system on which Bitcoin is based allows it to make encrypted and unfalsifiable transactions, making it a very secure monetary system for users. On the blockchain, if you want to change a transaction, you'll have to change it at the same time on all the computers in the network, which is impossible. Second, Bitcoin advantage: an independent currency. Many users appreciate the fact that Bitcoin depends only on its users on the network and not on a bank. This allows it to be autonomous. This is also what its critics accuse it of: it does not have a clear legal framework. Third, Bitcoin advantage: anonymity. The other big advantage is anonymity. You can purchase without our name, email, or address appearing. It is also for this reason that in its early years Bitcoin certainly attracted technology enthusiasts and bankers, but also traffickers. Recent court cases, however, show that the anonymity offered by this currency is relative, with buyers or sellers being identified, particularly when the funds are transferred or converted. Fourth, Bitcoin advantage: a network that extends. In the beginning, Bitcoin was mainly used on websites, but this virtual currency is now accepted by some merchants. Similarly, cryptocurrencies are increasingly being used by companies seeking financing as an alternative to the stock market. Lastly, Bitcoin is the money of the future. The future is faster than you think. This is what award-winning scientists and futurists like Peter Diamandis and Stephen Kotler say. To prepare for what's to come, a simple first step is to convert a part of your financial assets into Bitcoin. Take the step today, you'll not regret it.